Mr. Suresh S Iyer. He's the MD and CEO at Canfin Homes, joining us on the show. Mr. Iyer, thanks so much for making time and speaking with ET now. Let's start by talking about the growth outlook, because in the year gone by, you managed to grow at 18%. At the current juncture, how does the situation look like on the ground, and what's your expectation of growth in FY24?
Well, the first quarter generally is a little slow, so the loan book growth will obviously be, growing over the period. But in terms of disbursement, we expect anywhere upwards of 15% growth in terms of disbursement compared to the corresponding quarter of last year. So demand has been good, and we are quite positive that we should be able to have a good, healthy growth in disbursements.
Right. And are your growth targets for FY25, 24, what exactly are they looking like?
For the year, we are looking at 18 to 20% growth in our loan book and as well as our disbursements. We have done last year around 9,000 crore disbursements. So anywhere around 10,500 crore of disbursements should give us about 6,000 plus crore of net growth to the loan book, which will also be around 20%.
Rates have somewhere stabilized. Will you still continue to be bullish on the growth, and do you expect that momentum is going to sustain beyond FY24?
The demand should continue to grow in the coming years, because some of the problems that we had, mainly COVID, as well as the increasing rate hike that we had, those are kind of behind us. We are now into a stage where the rates have stabilized. Plus, the problems of the COVID are behind us. So now we are looking positively forward to see that we are quite hopeful the markets will also respond. The demand already in the market on the ground is looking a little positive, and we expect it to continue in the next coming year as well as going forward.
Okay, Mr. Iyer, talk to us about the demand demographics as well. Since the rate hikes have happened, has it affected demand in any way? Are you seeing a bit of a shift in terms of the consumer trends?
In terms of geography, there is no specific geographies. In fact, it has been all across. The rate hike has impacted everyone, and people have generally been postponing their decision to buy and invest into a home because the EMIs obviously have gone up. But now with stable rates, across geographies, we are looking at demand coming back into the market.
Right. And what about competition from, the bottom of 6.5% home loan rates? It's gone up to around by about almost 2%. Is there clearly a good competition since the repo is now up 2.5% as well?
That's right. In fact, the competition has always been there from the banks as well as from NBFCs and HFCs. So that's not been something new that we are facing today. As for the rates, in fact, earlier, about a year or 2 years back, in fact, the rate difference between NBFCs and like us and what the banks were offering to the best customer was in the range of about 100 bips. That already has started coming down and is today around 60 to 75 bips. So the competition is definitely having an impact on the rate, but it has been a little gradual. And with us also being able to grow, we should be able to absorb some of it as we go forward.
So where should NIMS spreads be in FY24, and where do you expect them to normalize?
No, last year we had a spread of about 2.35 and a NIM in the range of 3.5. We expect that to continue because, we last year also, in fact, we bore the brunt of the rate hike cycle because on our asset side, we have most of our loans, in fact, all of our loans, which are having an annual reset. So there was a lag effect in terms of the price hike that we effected for the customers. So in fact, last year, we've already seen the maximum impact of the rate hike cycle on our books. In going forward, therefore, we should be able to definitely sustain this kind of a spread and NIM levels.
Okay, just pushing a bit more as far as the NIMS is concerned to get more clarity, because 60% of your book is yet to see the repricing. Hence, is it fair to assume that there will be more upside risk to the NIMS?
Well, not actually. So there is a total 60% of the book. Part of the rate hike is yet to be passed on. So we have an annual reset, and we increased the rates on 3 occasions last year. So some of the book has already, 40% of the book has already experienced all the 3 cycles. There is some portion of the book which is yet to experience 2, and a small portion of the book which is yet to experience 1. Now, going forward, if the rates come down, it is possible that, when we actually the reset period hits, we may not be able to pass on the entire benefit also, because it will have to be a net effect that we'll have to give. Second thing is, we are also looking at a possibility that, customers may come back and asking for a repricing or a resetting of their loan rates, because the rates have started coming down. So we may have to pass on some benefit to some very genuine and good quality customers. So the entire impact may not come into our books also, but a little bit of positive is definitely likely. So from a 2.35 spread, we can expect somewhere around 5 to 10 bips improvement during the year.
Right, Mr. Iyer, great to have you on the show today. Thank you so much for taking the time out. Well, the big news from the West.